So Tyler, let's start with you. Would be great if you could just kind of walk everyone through your capital journey for Atom to date, and obviously, yeah, how kind of WeFunder was, a part of that tapestry.
Yeah, absolutely. The punchline here is so we've raised just over $10 million on WeFunder. That's over a couple rounds. For us as a startup, what that means is really our pre-seed and our seed rounds we did on WeFunder. Basically what that looked like was about 2 million raised and then about 7 to 8 million raised after that in a couple different rounds. And the two things that come to mind that I'd share right away is one, a lot of people ask me, for example, hey, would you rather raise VC or would you rather raise equity crowdfunding? And my answer is just both, because I think that there's basically no company in the world that wouldn't be better suited by having, a retail base, not only to give retail investors access to earlier deals than they could normally get historically, but also because I think that there's a great community storytelling aspect to it. With our business, obviously, we're giving people their limbs back and their abilities back. I think that story almost tells itself. And so there's a lot of rallying around that. But I just think any company could definitely do that. And so that's why, we really leaned on equity crowdfunding, which gets me to the second point, which is we have raised VC as a company. And so when we raise these rounds, what it looks like more behind the scenes is actually some combination of both. And our VCs have always been very supportive of our equity CF journey. I think they really love that we can get that kind of extra oomph from a marketing perspective, for example. And there's really nothing like having, I think we have just over 7,000 retail investors in Atom. Just like 20 years ago, I never would have thought that was possible, just straight up, honestly. And it's pretty incredible to me, honestly, to be able to have that resource of people that will go to bat for us. So we continue to work with them all the time. I get emails from our investors all the time, even still today. How are things going? Can we come by and test out the arms? Stuff like that. And it's a lot of fun. One last thought on that is, would we ever raise again? Absolutely, right? And I think this kind of speaks to the future of where I see folks like you going, Jonny, for example, WeFunder, which is, any company, whether you're pre-seed, seed, Series A, Series B, can raise money on these platforms. I myself was an investor in Mercury, for example, in their Series B on WeFunder. It was great. I even know Imad too, so it's great to be able to see him a week later and be like, hey man, thanks for letting me invest in your company. He's like, I didn't even know you invested, which I think again speaks to the power of these things.
Yeah, I love that. And just to kind of double click on something you said, so if you know the regulation crowdfunding laws well, which hopefully most of the attendees on this webinar don't, they probably have better things to do with their time than learn these laws to the detail that, all of us probably know them at this point. The most you can raise through regulation crowdfunding in a 12-month period is $5 million. So when Tyler there talks about his seed round being 7 or 8 million, and again, this is kind of part of what we're talking about today. It's like partly through Reg CF. I think you maxed out the $5 million Reg CF, but then, $2 or $3 million from either institutional investors or kind of large angel investors outside the WeFunder platform. And you can definitely kind of fuse those together. And you mentioned the Mercury Bank example. I would say that's probably, one of the most kind of prestigious companies that we've had on the platform alongside Kingscrowd and Atom. But Imad did it as part of his Series B, where he raised 120 million. I think it was led by Co2. Andreessen Horowitz invested. This was back in 2021. And then he opened up a $5 million allocation to let his customers invest on the same terms. I can't remember the valuation at the time, and he fully funded that $5 million in 24 hours from 2,500 customers. It sounds like Adam was one of them investing. So that's probably, for me, the most explosive example. Replit's another example of that. 80 million Series B. Andreessen Horowitz, Paul Graham invested in the Series B, and then $5 million from their customers. So another couple of examples of the fusion here of the customers and community with kind of VC institutional investors leading, pricing the round. Tyler, you kind of touched on this, but I mean, you kind of mentioned this almost like every round. Is that you would say that pre-seed, seed? Sometimes I hear from founders we want to hold off until a Series A or a Series B till we've built more of a community, so that then we can raise very easily from that community. It sounds like obviously from your perspective, it was more at pre-seed and seed as well as kind of later rounds.
Yeah, I think it's probably important to acknowledge that we were in a unique situation, which is one that when I started Atom, me and my previous co-founders had just sold our last company to Amazon. So I was able to self-fund Atom for a little bit. And then COVID started. And when COVID started, VC dollars just went, they all dried up. And so we got creative and we said, well, we want to keep pushing forward, but we as founders don't want to keep self-funding the company. So at the exact same time, funny enough, happened to meet Nick at WeFunder and thought it was a really special thing that I didn't know was as mature as it was. And so we said, well, why don't we just give this a shot? Let's see, worst case scenario, maybe we'll raise a little bit and then we'll go raise VC in a few months when the market comes back. And what ended up actually happening is we 200% oversubscribed our round. And a bunch of VCs, because they saw the momentum with the community round, decided, hey, well, let's jump over the fence. Yeah.
Love
And
that.
it was really powerful. So it was kind of that force amplifying effect.
Yeah, I really love that. We'll circle back later to kind of the perception of VCs and some of the kind of common objections that maybe raised or founders might kind of be thinking of in considering running a Reg CF. But Chris, before we get there, just want to kind of jump to you. Would be great to kind of for you to follow suit. Like, what's been your journey for Kingscrowd? Like the capital that you've brought on down the years. What's that look like?
Yeah, I'm a little bit of a different story. I was 25 when I started the company, had no money of my own for my own life, never mind a business. So I was in the sweat equity position of just trying to find a way to get this thing off the ground. I had no network. I left college not knowing what entrepreneurship was, right? So this was a whole new world for me. And so crowdfunding has been the vital lifeline by which we've built the company. It has been the lifeblood of me building our network, our capital stack, and everything we've needed to build our community. You can imagine when I started the company in 2018, when I'm 25 with no connections, no experience, yada, yada. So that's hard enough. But then you add in the fact that I said, hey, I'm going to build a data company for the Reg CF industry. And I'm pretty sure in 2018, if I go and look at the data, there was maybe 20 or 30 million invested across less than 100 deals. So to think that any venture capitalists are foolishly looking for markets that are already large, right? And they really struggle to think about markets that will become large. So no one had any interest in what it is that we were doing. So that created the real need to say, how am I going to raise any money to take this thing to where it needs to go? And so, in 2018, we ran our first round. We ended up raising about 120K. And that was literally me reaching out to and finding every angel investor in person in Boston where I was at the time, meeting with them, talking with them about what I was doing. And a lot of them didn't have a lot of confidence in me. So they were putting in $500, $1,000. But I was literally leaning on everyone that I knew, whether quite literally friends and family. My best friend from childhood who went to music school and wasn't making any money at the time put in $1,000. Like he's like, I believe in you. I'm part of this thing. I mean, everyone that I knew, I talked to about this and raised that first 120K. But that allowed us to take the first steps as a business. And then a year and a half later, I built relationships across the industry. Some of those folks, who I started to get to know better were like, okay, I have some confidence in you. And now I was able to raise more money from them. And one of the things that I think is deeply underappreciated in the market that I have leaned into heavily is using this as a way to build your network and then building relationships with those people. And a one-time sell of an investor can become a multiple-time sell to investors, right? And could become a really important part of your capital stack. I remember the first person who ever came in with a $10,000 check was Larry in Richmond, Virginia. And I was like, who is this guy that just wrote a 10K check? I don't know this guy. He just gave me 10 grand. That's incredible. And got to know him. He was one of the lead investors for our WeFunder round. I think at this point, he's put in over 250,000 of his own money.
Awesome.
And that's someone who started as just the lead from the platform, right? Someone I would have never known otherwise. And I could tell you
Love that.
so many stories about people who started with $100 and have become $250,000, $300,000 plus over the years. So we've come a long way, and we have quite literally utilized that capital to grow our business. And then to be honest with you, a predominant amount of our customers on the consumer side of our business have come from our crowdfunding rounds. We look at our customer growth, and every time we run around, it just bumps up, bumps up, bumps up as we go marketplace to marketplace. So it's played a pivotal role in our business. And very much like Tyler, we're now getting to a place where we're more established, where I have relationships and a network and all of those things. And so every round that we do, it's a side-by-side, AKA We raise money online on the portals, right? And then we also raise money offline, same terms, from, higher net worth investors or family offices, venture capital shops, things like that. And them seeing all the success we've had in raising millions of dollars from individuals and getting them to become customers, that to them is product market fit. So anyway, it's been a really, really interesting journey. Certainly not easy, and no capital raising is easy, and you should be really, really aware of that. But it can play an exceptional role in your business if you do it the right way.
Love that. Just to double click on something you said there, about, the investors in the Kingscrowd community rounds that you've done down the years being your, loyal customers and kind of brand evangelists. We've seen that at WeFunder. We've eaten our own dog food, as they say. We've raised $20 million now from about 8,000 investors on our own platform. We've never raised from VCs. We wouldn't necessarily rule it out. Maybe we will in the coming years, but to date, we haven't taken institutional money, just raised from our own investor base. And what we found is, I can't remember the exact stat, but it's something like the investors that we have 400,000 people that have made an investment on WeFunder. Of those, if you look at the 8,000 that invested in WeFunder, they have invested at a much higher rate. They've kind of churned at a lower rate. And I just dropped a link in the chat, a case study that we did with Arrived, which is another cool example of a venture-backed company that they had both Jeff Bezos and Mark Benioff investing in the same round that they let their customers invest in. And there's a stat in that case study that talks about, the Arrived customers, investors that actually invest in Arrived, then are just much more loyal users of the platform. The other thing just to double click on is, hi, Larry in Virginia. Thank you for believing in Chris and investing in Chris. He's doing you proud. Thanks for believing in this investment crowdfunding sector. Larry for Virginia, you are the man. Okay, Maria. So that's like one journey for Atom, one journey for Kingscrowd. You've seen dozens of these kind of raises and worked very closely with helping them to be a success. Are there other kind of use cases here for venture-backed founders that are running community rounds, working with capital department that you've seen?
Yeah, two cases we've seen do exceptionally well, and this is building on what Chris and Tyler have talked about, are definitely consumer product companies and healthcare companies. So on the consumer product side, one of our VC-backed founders actually said that running a community round is the highest ROI marketing exercise ever executed for the company. And I think that's because your customers become your investors and then they become your evangelists. And so I'm an investor in Fathom via the community round they did on WeFunder. Our entire team uses Fathom to record our notes. And I have to say, I absolutely adored getting an email from the CEO, Richard White, saying, you've gotten a golden investor badge that you can put on your profile, right? That really resonated with me. And what's interesting is with Mercury, I didn't get to invest because I missed it. Actually, Tyler told me that he had invested in Mercury. And when I went to the page, it was all sold out, to your point, Jonny, but I ended up signing up as a customer. And I'm still a customer of Mercury to this day, and I absolutely adore them. So that's how, a customer can become an investor and an evangelist. On the healthcare company side, I think it's really powerful because retail investors get to rally around the mission. I think this is why, Atom has been so successful. And I think it's why an example that is raising live on WeFunder right now, Healthcare Originals, is having such an excellent raise. This is a VC-backed health tech startup. Their AI-powered monitoring platform is fighting asthma and COPD respiratory attacks, which impact 50 million Americans. And the company itself is just an excellent deal. They've unlocked 5 million in contracted annual recurring revenue. The chief growth officer has literally scaled a med tech unicorn. The deal economics make a ton of sense. I highly recommend everyone go check out the deal. And if you are an investor, you're literally helping to save lives. So for me, when it comes to the use cases, it's definitely consumer product companies and healthcare companies that are making the biggest impact.
Love that. One thing just to kind of highlight is the diversity of the use cases here, right? So you have Tyler who, had previously exited, had some money, could kind of, self-fund, and then did a $2 million pre-seed, 7 or 8 million seed, kind of combining the community round with institutional investors. Then you have Chris, who was just starting out and kind of hustled and just ground it out to raise 120K. And you have healthcare companies that have raised from VCs to price and lead the round. And then they add in kind of money from their, patients even, or doctors, or community, kind of towards the back end of the round. And then you have kind of consumer facing companies, like Levels is a good example, and WeFunder, that just think it's really, really awesome to let their huge audience of consumers invest. So yeah, I think like the danger with a webinar like this is that someone listening will be like, oh, that's like the playbook, or that's kind of the use case, or that's the ideal customer profile, and I'm not that founder, so this isn't for me. So I just think it's worth like highlighting the kind of plethora, like myriad of potential use cases here. So any other thoughts before we kind of move on from this first question of when it makes sense for a VC-backed founder to do a community round, or like who it's a good fit for? Any other kind of thoughts on that question?
Hey, Jonny, I just wanted to give like super high level. I have like 4 or 5 examples here to hit across the spectrum, if you're okay with that.
Go for it.
To hit on that exact point. So, and some of these companies we've invested in at Kingscrowd, some of them are WeFunder companies, some have raised elsewhere, but just going to that idea that it really can fit any spectrum of company, right? So we invested in a pre-seed company last year called Personal AI. They raised $1.7 million via Reg CF, just after raising a $7.8 million round from Village Global, Warby Parker founder, so on and so forth. True AI, day zero company, zero revenues, just getting off the ground with an idea in the AI space, right? You have Our Bond, which raised $1.7 million on WeFunder, started by a founder with literally $900 million in exits to massive corporations that he built from the ground up, and $7.1 million in revenue, right? Kind of that Series A stage company. You have the Series B, that Mercury that you already mentioned, Jonny, that raised 4.9 million, right, from 2,500 investors in like 2 minutes after they raised their 120 million Series B. And then you have Advancing Eco Agriculture, which was a bootstrap company that raised 1.4 million on WeFunder, that had 18.6 million in revenue, $1.5 million in net income, and was profitable, and been around for a really long time, and kind of more like that mid-market PE deal. And then you have companies that raise money via Reg CF, like Alto IRA, and have gone on to raise Series A's and B's. They just raised a $40 million Series B a year and a half or 2 years ago from Advanced Venture Partners at like a 5 or 6x to what their original round was at. And then you have Beta Bionics, which was literally one of the first 3 companies to raise money in Reg CF on day 1 of Reg CF in May of 2016. I put $100 in because I just wanted to be a part of day 1 of Reg CF, and they just IPO'd for $1 billion plus. So like everyone and anything fits into that spectrum, right? And I just wanted to give those examples because that is just the concrete truth of like full spectrum and everything that fits in between there too.
Yeah, I want to jump in there too, Chris, and also reiterate, Jonny, to your point that I think community rounds are a great fit for all founders who have quality deals, right? I think the deal quality is really important, and there's a couple of reasons why. So one is that I think community rounds actually have a very founder-friendly structure. And so after getting my MBA, I served as chief of staff to a number of YC-backed founders. We raised everything from pre-seed to Series C rounds. So I always thought that was the way to raise money for startups. And then a few compelling points absolutely transformed my perspective. And that includes the fact that you don't have to give up a board seat when you raise $5 million via Reg CF. That's a big freaking deal. You can raise on a SPV, which means thousands of your investors are a single line on your cap table, another big deal. And then the network effects from those thousands of investors is super powerful. And I think the second reason why I think it's a great fit for all founders with quality deals is because of the untapped opportunity that Reg CF represents. So bear with me here, but Kristen Olson, who's the global head of alternative capital at Goldman Sachs, talks about the $4 trillion held by individual private market retail investors. That's a large amount of money. And when you think about the fact that PitchBook talks about how demand for VC capital outpaces the supply of it, and you know that that disproportionately impacts underrepresented founders, it presents a huge opportunity. So Black-founded startups receive only 0.5% of total VC funding, but actually in 2023, they represented 4.1% of all Reg CF funding. That's an 8x differential. And so the power of retail investors to influence and shape markets is absolutely undeniable.
Love that. Also, thanks for mentioning the SPV point. It is one of the banes of my existence that, like, I feel like most VCs still think that, you know, doing a Reg CF raise will screw up your cap table. It did actually used to be true. When the laws first went live in 2016, there wasn't a mechanism to roll investors up to one line on the cap table. In the rule changes that went live in 2021, the SEC increased the limit from 1 million to 5 million, and they also allowed for special purpose vehicles. So now we can use an LLC to an SPV to roll up 1,000 lines to one line on the cap table. So super important. Like if you're a venture-backed startup, that is like absolutely critical, and it just is totally taken off the table. That's one objection that kind of I hear from, you know, venture-backed founders, or, you know, maybe sometimes their boards, like, you know, oh, this is going to screw up my cap table. That's an easy one to just knock on the head. No, it won't. One SPV. Tyler, I'm curious. Another objection I have is, or I hear a lot, is like this might be seen as a negative signal, or this might make it harder to kind of raise, you know, follow-on capital and follow-on rounds. Love the point that you mentioned earlier, like you had some of your kind of institutional conversations and connections like come from the community round. So that's a beautiful kind of counterexample. But is there anything kind of more that you would say to that question of, you know, the negative signal or stigma of doing a community round?
Yeah, I mean, I think I probably have like too furious of beliefs here, but I definitely just think that it all boils up to just the founders. Like, I think that if you have any problems raising for any reason ever, whether it's VC, PE, equity CF, whatever, like it's on you as a founder. Like you're definitely doing something wrong and you should do something right. And I could say like unequivocally, I've never had a VC express any negative sentiment around either like the line item cap table thing, you know, with having like an SPV representing all the investors. They haven't even asked. They don't care. They're like, they don't even think it's an issue. Like, oh, great, you have 7,000 investors. I kind of assume it worked out nice. You seem like a talented founder. If it doesn't, it'll come out in diligence. And then to that point, Jonny, I think like I get a lot of founders who ask me, and I'm sure Maria gets this too, but I get a lot of founders who ask me like, how do you do it? Kind of to all of our questions around the playbook. And yeah, like we're all saying, there's 100 different playbooks you could run to successfully raise, just like there is in VC. And what it comes down to is just like relentlessness, always, just like anything. And so sure, you could say, for example, that, you know, raising equity CF, how does that differentiate from VC? It's kind of more like a Kickstarter, for example, where it's like you're just doing a lot of marketing. But what that really means is you're just reaching out to a lot of people in a lot of different channels, whether that's through email campaigns, that's through webinars like this, it's through direct outreach, just spear hunting, you know, trying to find the big white whale somewhere. Like you're going to have to do a lot of different things, and that's not going to change. In all the rounds of VC I've raised in the last 15 years, it's been the exact same thing, right? It's just you create a pipeline, you work the pipeline, you talk to people, you do the best job you can, and then hopefully you come out the other side, you know, with people recognizing your talent and your team and your culture, and you raise a lot of money and you get a lot of good partners along the way. And I think last thought there is I think that gets back to what Maria was saying, that like you have to have a good quality deal. And that just comes back to like you have to have a good business. You know, like if you're not starting a good business, you're probably not that investable in the first place. Right. On the other hand, you know, everything's malleable. So like the faster you work, the more relentless you are, the faster you will get feedback, the faster you can improve your business, the faster you can raise more money and better money. So I just think it's like this constant flywheel, basically.
Did you ever, it sounds like you maybe didn't, but did you ever have like a VC who said, oh, you know, oh, you did an investment crowdfunding, like, you know, I'm not really sure about that. Or did you ever have that objection? And then there was kind of a strategy that you used to overcome it, or you just like didn't have the objection in the first place because you're awesome and, you know, kind of that the
Sure.
WeFunder thing was kind of like secondary.
I think maybe in like literally the very first round we did, the first couple of VCs I talked to who were just friendlies, who reached out to say, hey, do you want to invest? But by the way, you know, I'm going to point you over here to WeFunder to do it. They were kind of like, oh, I just haven't done that before. But like they were very game, you know, they're almost like excited. And actually to that point, like one of our investors in the company is Trevor Blackwell, who's one of the founders of Y Combinator, who funded WeFunder, right? So like, when I talked to him, he's like, oh, great. I get to invest in a new company that's using one of my portfolio companies. You know, to him, it was like a double whammy. So,
Love that. Yeah, WeFunder went through Y Combinator in 2013. Yeah, that's awesome. Chris, Maria, I mean, this for me is like a really, it's almost like as a person like responsible for growing WeFunder, this for me I see as the biggest kind of break on the growth of the whole like investment crowdfunding sector, right? It's like, sometimes you hear this kind of negative like perception or negative signal or something like that. Love what you just said, Tyler. And that honestly is like my best answer to that as well, is exactly what you just said. The other thing for me is like, if you are concerned about that, then just have a VC lead and price the round. So I don't like Beehive is another example. They raised the 32 million Series B led by NEA last year, about this time last year. And then they announced a $1 million allocation for their customers, oversubscribed it in 2 or 3 hours. Like they had NEA just literally lead the round on the same terms. Like that, like how can you say that's a negative signal? So for me, if that is a concern, then just like fine, have like the VC lead and price the round. That's another thing I just would throw into the mix on this question. But Chris, Maria, I'm sure you guys have spoken to a lot of founders that like have had this concern or question. Like anything that you guys would add to Tyler's answer on how you kind of answer that?
Yeah, I would just say that, in one of our deals that's also live on WeFunder right now, Purette, it's a VC-backed company, YC-backed, led by, NASA and Harvard-trained rocket scientists. Their VC at Safar Partners actually recommended a community round. It was them who suggested they do it, and has since referred other customer portfolios companies over here. So I just think it's just not true anymore the way that it used to be potentially.
Yeah, I think more and more VCs are changing their mind on it. The other thing, just as super pedantic point, but just to pick on something Tyler just said. Tyler, you mentioned like you directed the VC over here. That's great. If we love it if VCs are investing through WeFunder, but legally it is also possible for the VC to invest outside of WeFunder in parallel to the regulation crowdfunding raise. How most startups raise capital is this exemption called Reg D 506B. That is limited to private solicitation. It's accredited investors only, but private solicitation. So that doesn't play very well with regulation crowdfunding, where you're kind of publicly promoting the raise. But regulation D 506C, a different variant of Reg D, it's still accredited investors only. But with 506C, you can publicly be promoting the raise. And so Reg CF and Reg D 506C, the SEC have said kind of can kind of work together. And so if there's a VC that wants to write you $1 million check during the WeFunder raise, normally we would recommend just take that off platform. Don't have that come in through WeFunder. And legally, that's fine to do as long as it's through Regulation D 506C. Chris, this kind of negative perception question, anything you'd add to that?
Yeah, I mean, I have a lot of thoughts, but to keep it really simple, first off, anyone who's telling you that, I think the question you have to ask is, are they planning to invest? Are they like really serious about investing? Or is this more a conversation of like, they're just kind of a complainer. They're just trying to make a point like, oh, I'm special. I'm the only one who can do this. And, I don't know about these companies. So I think a lot of times, like, who are you talking to that's really telling you this? And is it pivotal? Is this your board member that's going to block you from doing it? And what is their fear? Because oftentimes it's based in fear and a lack of knowledge, right? And if you could provide them awareness and education and help them understand 10,000 companies have raised billions of dollars. Some of the biggest venture-backed companies in the world have raised tens of millions or hundreds of millions of dollars doing this, and like with no repercussions. And it's a wonderful and fantastic thing. I think a lot of it is based in fear and a lack of education on the space. And little by little, that's changing. But guess what? Financial services takes a long time to change, right? And the best example I always use is like on the consumer side, mobile banking, there was all these reports, and I have like these articles that I need to find, and that like by 2003, mobile banking would be mainstream. And it took till about 2023. And it literally can take generational shifts for the whole new generation coming up who are running VC firms and whatnot. They gain comfort with it. Almost every one of our venture capital investors that's on our cap table, and we have 10 or 12 VC shops that have invested in us, almost all of them are first-time funds or female-founded funds. And they're all kind of up and coming and going, yep, this is the future. We're probably going to have all of our deals do at least a portion of their raise on these platforms. So it's coming. There's a wave of new minds that see this as a mainstream part of the capital stack. And anyone who's telling you you shouldn't go find more money elsewhere outside of the traditional system is not looking out for your best interest, because capital is a commodity, and wherever you can get it, you should be taking it. So those would be my key points. There's a whole bunch of other thoughts out there about, well, are venture-backed companies even good, right? If over 90% fail, what are we talking about? Like, the rate of failure in our market over the first 7-8 years now is 17%. So we're far outpacing the venture industry. So one has to ask, like, what are their intentions if they're telling you, that's a negative selection bias? It's not true. The data is
Yeah,
not true.
just to double down on that, I've seen more and more examples recently. I think especially with the wave of startups like closing in the last couple of years because it's like harder to raise capital. I've literally seen so many examples of founders that I was chatting with like a couple of years ago, and a VC said, not sure about this, like don't do this kind of WeFunder thing. So but then they don't actually invest, and then the company runs out of money, or like then comes back and it's too late, and it's just like it's incredibly frustrating when I see those stories. By the way, I wore this sweater for Maria here, my capital department merch. So, but now I'm kind of too close, so I apologize. Just a fleeting glimpse of the capital department logo there. Shifting gears a little, advice for founders who are looking at running a Reg CF. Chris, should we reverse the order? You want to start on this one?
Sure. Yeah, I'd be happy to. I think first and foremost, and it's a really basic thing to say, is like, you need to commit to the round, because I think there's a negative selection bias, concept from investors telling you that. But then there's sometimes this founder thing that I think they don't want to take this space as seriously. Like, oh, we'll just go over there and we'll raise some money, right? Because that's the easy money. Like, we figured out the VC thing, or we tried to do that. It's really hard, but this should be the easy thing. Like, this is as hard and maybe sometimes harder than raising from venture, right? Because you have to win over a lot of people. It's not just one or two yeses. You could be talking about hundreds or thousands of yeses to get to the right level of capital that you need. So the first thing I would say is, like, you need to set your expectations. So if you are a first-time founder coming out of the gate with, an early days company, first you need to structure your deal right. Fair valuation, preferably a really preferable valuation. You're not giving them special terms and, all of that kind of stuff. So give them a really good valuation, give them a compelling reason to invest in you. And then you have to be willing to work that deal and recognize that, like, if you don't have any built-in community, anything, and you don't have a budget to spend on marketing and growing your audience, like, then you're going to have to commit in a different way than a founder is coming in with millions in revenue and a large community. And maybe you could just tell his community, hey, you should invest, and they'll activate that community that they've had for a while. If you're a first-time founder, you got to say, okay, reasonably, I want to shoot to raise 250K, and here are the milestones I want to hit with that, and here's a reasonable valuation attached to that, and here's how I'm going to get the first 50 to 100K into the deal by trying to leverage the network and the people that I know, even though they're not really my network today. I think I could build into that. Like, you got to set the right expectations. And then if you're, a later stage company with millions in revenue and a nice balance sheet, and you say, hey, I want to go raise 5-10 million. Well, okay, what are you willing to commit? Are you really going to commit to the process of raising money and doing all of the updates and engaging the right parties and spending on marketing to get yourself to a successful round? If you're willing to do all of the right things and really invest in the round, I think anyone can be successful. But when you have misaligned expectations and a lack of effort by the founders, that's a recipe for failure. So you got to be committed and have good expectations, regardless of where you are in the journey of being a company.
Love that. Maria, you might be the person that's dispensed the most advice to Reg CF founders of anyone in the universe. I might rival you for that crown, dubious accolade. But what's your advice? Save everyone the money of paying for capital department, and just tell them what to do in the next 2 minutes.
You got it, Jonny. Fundamentally, fundraising is sales, right? So I think it comes down to, first and foremost, mindset. As Tyler said, you have to be relentless. I also think you have to be shameless. You have to be open to celebrating rejection when it comes your way, and even embracing it as part of the process. I learned this personally the hard way when I was a founder in my early 20s, and literally used to Google how to overcome the fear of asking for money. And so I would say that what I learned is that no one is above it. You know, Jack Ma, the founder of Alibaba, talks about how rejection was a huge part of his founder story. And so many other founders do as well. And so if you're getting rejected, you're just, in the company of greatness. And then I think it also comes down to storytelling. The narrative is so powerful. And what I find is that you can have an excellent company and an awful story and not raise anything. And sometimes you can have a mediocre company and a phenomenal story and raise a ton of money. So let's try to keep it with the quality companies with the great stories, but urgency really converts. And so always answering the question, why this, why now, why you, in every investor communication. And then finally, I think it comes down to a high performing pipeline. So part of the work we do is to land and expand investors, very similar to enterprise sales, right? You get an investor in, and you hope to increase their allocation while the raise is live. So for instance, if you bought one share of NVIDIA in 1999, does it mean when they IPO'd, does it mean you didn't buy any more like in the last 5 years? Probably not, right? So, I think it's true too for community rounds. Like you can get, you make your initial investment and our goal is to help you increase it or be inspired to do so over the course of the round.
Love that. Yeah. And Chris gave some awesome examples earlier of someone that starts with $100 investment and goes on to like literally 1,000x that over the life of Kingscrowd. Tyler, anything to add on advice for folks running a community round?
I'll probably just work with Maria is the real answer here. Okay.
Maria, you can send him the $5 in the mail later.
Yeah, exactly. Honestly, just like big +1, massive +1 to what Chris and Maria both said. To me, I would just say it's like 3 things. Like if the question is, if you're a founder and you're considering raising and you're going, should I do equity CF? I would say 3 things. I'd say 1, raise however you know best already. If you know how to raise VC, probably go try and do VC rather than trying to, if you play baseball, don't go try to pick up soccer. Like Michael Jordan could try to do that, but probably don't do that. 2, yeah, you do just have to be relentless. It's like the only thing you can do. And 3, don't overthink it. It's like, it's a game of psychology, right? Like your own psychology is the most precious thing whenever you're fundraising. And to Maria's point, fundraising is just sales. You're just talking to people. And I think that I have a unique perspective because I raised, a couple million without working with Maria first in our pre-seed round. And then Maria and I had the pleasure to meet, and then we got to work together on, our next round. In that first round, like that was brutal, right? Like I was answering hundreds of emails a day, every day for like, 2 months. And it's just a lot of work. I'm a masochist, so I love it, but like, it's not conducive to a successful raise. We probably could have raised even more. So I think like, just being relentless, knocking down every single door you can to try to get every single dollar you can until literally the whistle is blown. Like you just got to do it. And I agree completely, by the way. I've seen some okay companies raise just an insane amount of money. I've seen some great companies raise kind of a mediocre amount of money. And that's no different in equity CF than it is in VC. And it always comes back to the same thing. It's how relentless you are. That's the one thing there.
Love that. I'll just add one more thing, actually, going back to something Tyler said on a podcast interview that I did with him, I don't know, years ago at this point, maybe 3 years ago or something. I'll drop the link in the chat. But I remember you said this and it stayed with me ever since, that like one of the keys to success with a community round is to find investors, find people that share your crazy. And one of my favorite things to do at WeFunder, we have the Slack channel of all the investor notes. So whenever someone invests, it pings in the Slack channel. And then most of them will have a note from the investor. After someone invests, we say, why did you invest in Kingscrowd? Why did you invest in Atom? And oftentimes investors will say, and if you read the investor notes on the Atom page, like I can't imagine like what this made you feel, Tyler, as like the founder of the company. But even for me from afar, it's like people that are veterans who had, former colleagues lose limbs in combat, investing in Atom because Tyler's trying to make a better life for their former servicemen colleagues, and like to read those notes. But the point is that those people like share that crazy. Whatever is your thing that you're super passionate and excited about as a founder, the dent in the universe that you're making, your kind of niche. If you can find people that are super passionate about that, like you are, then inviting that, it's like a lot easier to kind of get them to come in and invest. And those are the people you most want as allies and like champions and your brand ambassadors and kind of loyal customers and like on your team. So that's just kind of one last point from me on that question. I will bring you guys' attention to the time here. It's like 2 minutes past the scheduled time for question. Just masterful kind of orchestration of like the timeline of this webinar. You're welcome, guys. We're going to shift to kind of audience Q&A. I've been taking some notes of the questions that have already come in. If you want to ask a question, there's a Q&A tab at the bottom, or just drop it in the chat. So let's kind of shift to kind of audience Q&A here. First one, Chris, I think you'd be a great person to answer this question as Mr. Markets on this call. My company raised 480K via Reg CF in 2021, and our business has grown and progressed well since that round. How would you say that today's equity crowdfunding market compares with the market back in 2021?
Yeah, it's a great question. There's positives and negatives, if you want to put it that way. The positives are the market is a lot bigger and a lot more sophisticated. And on a sophisticated front, I mean, you have folks like Maria and all sorts of agencies and people and even newsletters out there that you can work with that can really help drive eyeballs and traffic and people coming, right? And this is all sales. So building a much larger funnel than used to be possible. And there's a lot more people aware of this market, so they're not as scared to get engaged and invest and actually play the game. So that's great. On the positive side is that. On the negative side is there's a lot more companies competing for the same space. And so there's always that evolution of like, you know, you got to spend money to make money, right? Or make efforts that competing for those eyeballs. So the challenge of, you know, competing against other companies that are getting more sophisticated and working with better service providers continues to increase as well. So you kind of have to balance both of those. But I would say on net, it's a net positive, and overall, you should have an opportunity to raise more money. On the other side of it, you know, one of the things that I think is really important, and hopefully you've been doing, is people still expect to be getting really thoughtful communications, updates, really good investor relations, and we see it. And we're starting to work on ways to quantify this, but companies that are really good about that are raising dramatically more than the companies that aren't putting efforts around their continued investor relations. So hopefully, if you've been doing a good job and keeping those folks up to date, and at least you do have positive business updates, it sounds like you'll be able to bring along some of those 480K to come into a new round. Certainly not all of them, but even if you convert 10 or 15% at larger check sizes or the same, you're already getting that, you know, nice start to your round of funding. So, like I said, more sophistication, more eyeballs, more awareness, that's great, but also more competition for those eyeballs.
And I'll just add there, Chris, as well, that the Kingscrowd newsletter actually drives a ton of volume for our founder. So when that's
awesome.
A Kingscrowd profile, when you guys endorse them as a top deal, et cetera, we love seeing that uptick in traffic. So thank you as well for all the work you guys are doing there.
Sure. Glad to hear it.
I would just add one more thing. For me, like, I would say now is a better time than 2021. For one reason, which is that the perception and the kind of prestige of doing a community round is like much more elevated than I think it was back then. You have more and more examples of companies that like have raised from VCs and are doing this very obviously not because they need the money, but just because they think it's cool to let their customers invest. The SEC kind of lifting the limit to $5 million, allowing for SPVs for one line on cap table is a big part of that. And then I'm obviously biased, but we really, and I don't know, I might have a kind of fight with Chris on this one, but we love the term community rounds. It's like so interesting to me how just changing the word from like equity crowdfunding to community round has like elevated the prestige. Check out the website communityround.com. We built that. That phrase, I think, was basically invented by WeFunder in 2022. And that for me is also kind of part of that like elevation of prestige. Our vision is a world of future where every VC-backed founder, especially consumer-facing companies, are letting their customers and community invest like alongside VCs from the get-go. And you know, we're kind of slowly moving in that direction. So that's kind of on the market side. Next question. Hopefully this is a quick one. I'll just like knock this on the head. There was a question: how do VCs and institutional investors view a Reg CF cap table? I've heard lots of investors make VCs squeamish. Yeah, that is basically taken care of by the SPV point. We use the same SPV structure as AngelList, which has been around for a long time and has some great precedent. So I think that concern about a messy cap table used to be a lot more of a thing. These days, like if you actually understand how this is structured on the cap table, the SPV structure we use kind of takes care of that. Next question. Tyler, I think you'd be a great person to answer this one from Chris. Shout out Glafabra. I have an angel who says crowdfunding for pharma biotech is not a good idea because it's not as strong a validator as spending your time on getting an SBIR grant. What would you say to that?
One, they're not mutually exclusive. Just do both. Two, SBIR grants, SBIR grants. We've gotten two at Adam, one from the Air Force, one from the NSF. They never take less than a year to get. So unless you need money a year from now, and I'm assuming you need money now, probably that's not super conducive. I think that my question back, if I was talking to that investor, would be like, who are we talking about the target audience being here? Like, if you as an investor want me to go get a SBIR grant so that you invest, that's one thing. But if they're just sort of saying like, hey, to be a good pedigree company, no, like I fully reject that. Like, just go raise money, get your government grants, get your VC, get your equity CF. They all will be required probably at some point if you're building a pharma or biotech company. And you're going to want to work with the government and you're going to want to work with VCs. You're going to end up doing both anyway.
And by the way, pharma and biotech have raised several $100 million over the past couple of years, and actually I didn't expect it myself, but has been one of the strongest categories in Reg CF. So the stories around health, I think, really resonate with people. And also something that a lot of people miss in this space too is they think, well, only consumer, and consumer is absolutely great. Don't get me wrong. It's easy, simple to understand. But there's also a lot of investors and typically the larger dollar investors in this space that are just looking for a good investment. And if you're offering them opportunities to invest in biotech or med device or whatever it is, and they see long-term potential for it to be worth a lot of money, they're going to invest. So anyway, it's a great category to raise for.
Yeah, and Maria, I know you've been working with a ton of healthcare founders like Tyler, obviously at Adam, Pirouette, HCO, you already mentioned, Nasaclip. I presume you would endorse Chris's words there.
Absolutely. Just go raise the money. And if someone's going to give you advice about how not to raise money, just ask how big the check they're going to write will be.
Good point. Okay. So someone asked Chris a question specifically about Kingscrowd. Chris, I'll leave you to deal with that offline. But it actually makes me think of another question, which kind of goes back to what you said earlier, Tyler, about investors kind of reaching out to you and saying, hey, can I come and tour the facility? One objection I think we've had to Reg CF that we haven't kind of touched on over the last hour or so is I think sometimes I hear, oh, this is going to be a pain in the ass to manage, the kind of communications with like hundreds, potentially thousands of investors. Like Tyler, I think you mentioned you have 7,000 investors. Chris, you've got a ton. Maria, you've had founders that have dealt with this. What would you guys say to that concern?
Yeah, I'll just say this, e-commerce companies manage tens of thousands, hundreds of thousands, sometimes millions of customers. And so there are a lot of technology tools and experts out there that can manage digital communities. This is not new. And so you can really look to inspiration from existing e-commerce companies. Ultimately, we're driving traffic to get a conversion online for someone to purchase something, which is equity in your company.
Yeah, I'd just add one thing to that, which is if we're talking about the block and tackle operational perspective of being a founder who has thousands of investors that could potentially contact you at any point, one, it's not that bad. It's really not that many people who email you all the time, right? Two, usually they're praise and it's great. You get a free compliment with your coffee in the morning. And three, I I just think it's about setting expectations. So just tell your investors like, hey, here's the cadence at which I will update you, and feel free to reach out to me in the meantime. Like I've definitely not been perfect at email. No one is. And that would be an unreasonable expectation. Sometimes I'll have a bunch of investors email me because they'll see a news article, and then I'll take 3 days to reply because I'm busy, sleeping at the office trying to ship robot arms or something like that, and that's okay because they know that we're working, and then you go back and they're still there.
Yeah, I love that. Just to double down on that, I was actually going to say the same points. Well, firstly, I want to use like get a free compliment with your coffee as our new WeFunder marketing slogan. So thank you for that. Attribution, Tyler Hayes. Tom Licks is the founder of Cleveland Whiskey, a spirits company that raised on WeFunder. And I remember one time I invested in him back in the day, and I got an email like, hey, thanks for all your suggestions. I read everything you send. I don't have time to respond to everyone, but I love it. Like, please keep sending the suggestions and feedback. So that's kind of on the expectation setting point. And then the other, this is kind of to the compliment point that Tyler made. For me, like as a founder, you want your customers to be super jazzed and excited and engaged about what you're doing. So yeah, sometimes like you'll get a lot of emails, but like, isn't that kind of exactly what you're trying to do, is like build kind of stronger community and engagement around this like startup that you're trying to bring into the world, which is really, really hard. And that for me, we're actually building some product features around this at WeFunder, which I'm really excited about. It's like, Chris mentioned like capital as a commodity earlier. To some extent, I agree with that. And like we've talked about, like, raise money from wherever you can, different sources. To some extent, I think like there is an extent to which capital is differentiated. Like, and VCs will say, hey, we're going to add a ton of value. It's not just the money. We're going to open our Rolodex, take a board seat, and that's great. Take that money. The differentiation of WeFunder's capital, of community round capital, is if you have 8,000 investors in your company like WeFunder does, that's 8,000 brand ambassadors, and that's 8,000 loyal customers out in the world. That's a huge part of why you do a community round. And like, so it's a bit of a quid pro quo, or a reciprocal relationship. The more that you invest in kind of updating investors and engaging investors and responding to the investors, then you're kind of continuing to like build the enthusiasm of that army. And that's what this is kind of all about. One last question, and then I think we're at time. Hopefully a quick one. Maria, you want to speak to this one? Question from Jackie Logan. What up, Jackie? Raise green. Awesome. What are your thoughts regarding angel investors going into the Reg D round versus directing them to the CF round? Is there pushback? What's the argument to have angels go to the CF round?
Best case scenario, I think you are raising as much volume as possible via your Reg CF until you max it out, because it helps accelerate the flywheel of momentum, if you will. And on WeFunder, for instance, you actually unlock marketing opportunities to be featured in their newsletter, et cetera. The only time in which it wouldn't make sense is if you're dealing with maybe a check size that's very, very large, and the investor says, hey, I want to have differentiated rights and I'd like to be listed directly on your cap table. But otherwise, I say keep it clean, keep it simple, get them through the platform.
Thank you, Maria. That's more revenue for WeFunder, so I appreciate that answer. We are at time. Guys, thanks so much for your time. Like, you all are super busy founders. Really appreciate you taking an hour of your time to like do this and kind of share your advice and wisdom with founders that are hopefully going to be following your footsteps. Thank you. Any last plugs from any of you three guys?
Yeah,
I just put, oh, go ahead, Maria.
Thank you. Yeah, Tyler, VC-backed founder, backed by Village Capital, LPs include, Jeff Bezos and so forth, like raising community rounds and raising $10 million. So really at the forefront of this. So just massive kudos to you, Tyler, for doing this. It means a lot to all of us here. Chris, thank you so much for everything you're doing with Kingscrowd and Kingscrowd Capital. This industry is better because you're in it. And finally, Jonny, you have a long-standing career of innovative finance from Kiva to now the president of WeFunder. And if it weren't for WeFunder and all the work you guys did on the Jobs Act, we wouldn't even be on this call. So thank you so much as well.
If you ever want to chat, just learn more about the CF space from the founder side, from understanding how to do these things, I'm always happy to be helpful. Feel free to email me at chris@kingscrowd.com. I'm an open book. And like I said, really happy to chat anytime with anyone.
Tyler, anything you want to plug?
Go raise on WeFunder and work with Maria and Chris.
$5 coming your way as well from me. Thanks everyone. Find me on LinkedIn. Check out WeFunder. Thanks for joining us today, and we'll see you on your community round.